Hey everyone, welcome back to the Capital Mindset Show. Today we're going to be revisiting a company that this channel has had a little bit of a history with. For those of you who've been watching the channel for a long time, welcome back as always. And you know that company is Intel. So Intel has been requested actually because, it's been coming down. And again, some of you remember those old days when I held Intel for, I don't know, was it like a month or less than a month? And I sold because I disagree with what management was doing. I thought management's direction as to how they were allocating capital was not optimal. And actually since then I've had a not change of opinion, but an evolved opinion actually to the detriment of Intel. So I'll explain a little bit about it here today. It's not too terrible, just so you know. It's not like end of the world, but a lot of nuances from either discussions I've had with what I consider to be subject matter experts, and actually one such conversation came from a subscriber, and then from there it actually kind of went even further than that, where I actually spoke to some people who actually worked at Intel. But I have to thank the subscriber, and this person asked to remain anonymous, so I'm going to respect their wishes. They are definitely very, very intelligent. So my conversation with them was very enlightening, to say the least, regarding this industry. So I learned a lot from that conversation, and then it actually helped me prepare for the conversations I would later have with some Intel employees who also will remain anonymous for obvious reasons because they still work there. So this video will be out here for the public. I will just be kind of culminating all that aggregated knowledge into one thing and try to provide you guys with as much value as possible. So if you guys end up liking this video, go ahead and feel free, if you would like to, leave a like or comment down below. It all helps out. And with that being said, let's actually get started. So Intel is actually down. Okay, so for those of you who are newer to the channel, I held Intel for a little bit, and it was just a small portion of the portfolio. I had bought it because it was being depressed. You could say that it fell out of favor with the market, and it was around. And actually, if we actually see the video, and I'll take us right there. Here, I've taken us right to the video. So you don't have to watch this video. I'll kind of summarize the thoughts, but you can see the title, Intel Spinoff, What Are They Thinking? And it was posted on December 13th, 2021. Okay, so in summary, what this video was about was a bit of a concern as to how Intel was actually acquiring its capital to invest in its foundries, or its fabs, sorry. And so with that being said, I don't disagree in that investment per se. I think that's actually a very necessary investment. I just disagree with the way they're going about it. So some of the ways that they're going about it is they're spinning off, or they're actually selling off a good portion of Mobileye. I don't remember exactly off the top of my head what the percentage is, but the plan is to sell off a big portion of Mobileye, not necessarily spin it off. And so with that capital, they're going to invest it into foundries. Now, I will get into exactly what I disagreed specifically with that after we kind of talk more about the price action. So as of closing on Friday, it was down 6.94%. The reason that we can actually attribute to this is previously, and actually we stated this in the 2021 videos on semiconductors, that it was kind of a optimistic view that the shortage would kind of conclude in 2023. But that was actually statements coming out of all the other semiconductor companies, that 2023 was when things would actually fix themselves as regarding to supply chains. But however, Intel CEO actually more recently came out and said, no, it's actually going to take 2024. So this extension does actually have an impact on the business, right? Because we have to evaluate the timing of these, of these performance metrics. So that, in essence, kind of caused a suppression of the share price on Friday, 6.94%. This is a risk that the broader industry has been having. So if we actually take a look at something like AMD, a lot of them are actually coming down as well. So if you take a look at AMD over the past 1 month, and remember we did an analysis on AMD right around here, okay? So, and then we were wrong, all right? So I was wrong for a good portion. It was up, 50%, but then afterwards, and you guys can again go see that video. It's on the channel. Now it's down finally, the 16.53%. AMD is a company that I am actually interested in, by the way. It's on the watch list. But we'll actually discuss the nuances of AMD and versus Intel. There's actually some interesting tidbits that I'm going to share with you guys later, hopefully. Not hopefully, I will. Don't worry. All right, so first things first. Again, so the price action today, to finish off, this is probably Intel sympathy. But for Intel, there's kind of concerns about the future supply chains, etc. Doesn't mean Intel is going to fail at it, but it's good to note that. Now, with regarding to what other creators have been saying about Intel, we know that, for example, channels like Everything Money have been saying that Intel is a good buy. They've been buying Intel in the 50s, and still, I think hopefully they're still buying, because if they thought it was a good buy then, you should still think it's a good buy now. But what I'm going to kind of share is what I believe their analysis to be quite a bit surface level. So hopefully I can provide you guys with a bit more color. If you guys watched them and then got interested in Intel and you maybe purchased Intel, you watch this video and hopefully it provides additional value to you. So that being said, I had Intel for a bit, sold it. Concerns. Why? Okay, Mobileye. I just mentioned that. But specifically, what happens with Mobileye? Well, Intel right now, they pay a dividend. Okay, they pay a dividend of, let's say, 3.35%. And, they can afford this dividend, and they're also doing buybacks. My opinion would be that management, if they need to make that necessary investment, should be stopping those return of capital to shareholders. It's not appropriate for you to return capital to shareholders when you need money to reinvest into your business. The implications that they're showing me is that they need money, right? That's very clear. They need money. They'd rather sell off assets than just reallocate the capital they're already giving back to the shareholders. So they're very short-term minded. They're trying to not allow that share price to come down. Now, with that being said, if we actually take a look at those buyback performances, if we take a look at the 5-year, the buybacks, if they were to do what they did, it's essentially an admittance that the buybacks were a destruction of shareholder value, an absolute destruction. I will dedicate a video as to the studies conducted on share buybacks and why I say often on the videos. And I always say this, capital mindset, hopefully the one lesson that you take from this channel is that investing is nuanced. Investing is incredibly nuanced. The answer to everything is it depends. It's not a clear cut and dry, one is better than another. It depends. So with buybacks, it depends. I would say I completely agree that buybacks are superior to dividends in this specific scenario, that they are quote unquote executed well. Okay. So when they're executed poorly, it is equivalent of grabbing money, throwing it into a fire and watching it burn. That is what happens when you execute buybacks poorly. Intel might be, not yet, but might be a good example of this in the future, where they should have been investing in the business instead of dedicating so much to the share buybacks. Okay, so we'll get into company-specific issues after we get into the PowerPoint presentation. Okay, so here we have the PowerPoint presentation. This is the sales pitch by the company. This is their good side. This is what they want us to see so that we invest in them. Okay, right off the bat, we have Pat Gelsinger, right? He came in. He's trying to fix the ship. He has an engineering background. Okay, now the problem with the previous CEO is, and by the way, I'm criticizing almost myself in this instance, but I think I like to think of myself as I understand the importance of when you're a company that is centered around an engineering firm, that you need to be very cognizant about that, and you cannot squash that. So I believe that the previous CEOs, this is my personal opinion, have not done a good job at making the culture at Intel very conducive for innovation. Okay, so when I actually looked at, and this is actually, I'm kind of sharing tidbits about the discussions I've had, the performance of Intel actually mostly centers from their Israeli divisions, not their North American divisions, which I found very interesting when I found this out. The North American divisions seem to have been squandered by management over the years. Okay, they have, basically there are individuals within the organization that are effective, but on a broad basis, there's a lot of inefficiencies, and a lot of the innovation actually comes from and stems from, or a good portion of it comes from the Israeli division, which seems to be far removed from the ailments occurring in the North American division. Now, there was a specific instance with Intel in Europe where they basically closed down a lot of these facilities, okay, just to be a little broad here. And they basically sold off this division to another company, right? And I think the company, might be actually ARM. I think ARM was the one who bought it. But regardless, they sold this division off, and they found out later, the management team, this is where I'm saying they make these big mistakes. And this was in 2015. They sold off this division, and this other company bought it back. And then they realized, oh, we actually needed that division, those components. We need those components. So then that company basically were selling them back to Intel. They're like, oh, yeah. we'll sell it back to you at a premium. Okay, and then Intel was kind of they messed up there, to say the least. They messed up there, but that's an example of what happens when you get this bloated organization and you have management team that doesn't really even understand the business or the details of their business, and that's very bad. Okay, to say the least. That's obviously bad, but to say the least, it's pretty bad. All right, so we have Pat Gelsinger. He's coming in. He's trying to fix things up. This is the past. All I'm discussing is the past. Pat Gelsinger, he's in power now, and he's trying to fix things. You have David Zinsner, and he comes from Micron. Also, pretty experienced, I guess we could both say. But Pat Gelsinger, he's supposed to be, and that's how he's been marketing himself, as bringing back that engineering culture. This is not just like my opinion or the people I spoke to's opinion. This is actually broad, normal opinion that the previous management was just destroying the engineering culture. Okay, so let's go through this. And I'm going to share more information, by the way. That's just like the surface of it. All right, so beat expectations of revenue. Okay, EPS, cool. Gross margins. Executing on our strategy. Okay, all that, fine. Industry outlook. Okay, so this is a good way to kind of actually break apart what Intel is trying to say here. Long-term sustainable semiconductor demand. I'm going to actually talk about this. So with regarding to semiconductor demand, I've talked about this in the past in previous videos, that Intel got so lucky, so incredibly lucky, that they were able to go through this transitionary period or go through this struggle period in a moment where semiconductors, there was a shortage, okay? AMD, on the other hand, was so unlucky that they went through it during a period where there was a shortage, because essentially it actually hampered their ability to dominate, right? And Intel, it benefited Intel in the sense that they were able to kind of secure demand or secure their sales, because even though their competitor was, beating them on a cost to performance metric, they still had enough demand to kind of fill out their sales. So they didn't lose as much market share. And this was a statement I stated on Intel in the past. And that's actually one of the reasons why I was actually buying Intel at the time. I thought if they can get through this, this is a good moment for this to happen right now. Okay, so continued need for resilient and balanced supply chain. Okay, obvious. And we know this, that they're building facilities here in the United States, but also Taiwan Semiconductor is building facilities in the United States. We're going to put a pin on this, okay, and then we're going to come back to this later, because there's a very interesting risk profile with this business that is to their benefit, but also to their detriment. But we'll come back to that. So put a pin in that idea, and then we'll come back. Okay, government action is required. So we also know Pat Gelsinger has been, lobbying the Biden administration to basically not allow Taiwan Semiconductor or other firms to get the funding to build out their fabrication facilities here in the United States. Just Intel, because Intel is the only American company. All right, so execute on the strategy. These are their products. You can kind of break it down. Now let's do the financial highlights. So revenue is down 1%. So revenue has been kind of falling down here. And revenue, the sales figure, that's very important. That's actually why the broader market is actually selling off in the semis, okay? Because we are seeing concerns, and we've talked about this a little bit. We are seeing concerns that a lot of customers are kind of scaling back their orders. Very interesting. Put another pin on that, okay? And there's a lot of pins we're gonna put. So put a pin on what we just talked about, and then put another pin here, okay? So gross margin, 51%. They're declining gross margins. That is indicative of competition actually coming in and squeezing, or they're not able to fight the inflationary costs. The inflationary cost pressure from a producer standpoint, they're not as able to fend that off. But it could be either or. I'm leaning on it's a mixture of the two. EPS is down 35%. Okay, that's going to be something to look at with regarding GAAP net income metrics, but we'll keep it like that. Client computing group. Okay, so this is down. This is a huge portion. This is a huge portion of their actual business. Revenue is down 13% here. Revenue over here in the data center is actually up 22%. This is where they find so much demand that even though there's a lot of competition, AMD is really attacking them here, and so is and they're going to be attacking NVIDIA soon with their graphics cards. But regardless, there's so much demand to go around here, so I do expect that to continue to grow. And then right here, Network Edge Group. So this is up 23%. But again, these two businesses, they're a small portion of Intel. Together, they're still smaller than this segment here. All right, so these are their other segments. So Mobileye is what they're selling off. They're selling off a good portion of this. That is a high potential business that, again, management has showed me that they'd rather sell assets than just stop allocating capital to shareholders, okay? And it shows me that they've been making a mistake this whole time. There's been butchering of the balance sheet of their capabilities to invest in their business over a long period of time by management. Management has decided this. And then I'll state this by an apology to all you engineers out there who work. I apologize on behalf of all the finance and accounting people who work at your industry that some of them, sometimes can make very bad decisions. And we talk about this a lot in a macro sense. So a little bit of a macro talk here. We talk about the problems of malinvestment. That malinvestment, for example, on a governmental level, on a national level, doesn't actually show up till a while from now. So if you do a bunch of malinvestment now, a lot of, let's say the voter base doesn't understand the gravity of the situation of where that money actually is going might actually cause adverse consequences in the future. And it depends on what it is you're talking about. Those consequences might be, in a year from now, in 10 years from now, in some cases. But the point is, malinvestment is a very difficult thing for people to actually wrap their heads around in cost. And it's something as an investor, you have to be very cognizant of, because if you're not paying attention to it, it's something that's not going to show up in the moment, which makes it very dangerous. So malinvestment shows up later, okay? Examples, for example, like GE, IBM, Intel in this instance. Intel was not investing in its business the way it should have been. And those consequences are showing up now. You have to identify those moments and then think to yourself, can they surpass this? Or is this very detrimental? I'll say right now, I don't think it's past the point of no return for Intel, but it is reaching a concern moment for me. And it has been reaching a concern moment for the market for quite some time, as you can see in the price action, right? That's what the market's kind of telling you. It looks cheap. It has looked cheap. It has looked cheap for reasons, all right? So we're just outlaying some of them. All right, so Foundry Services, I want them to invest in that business. I want them to grow that business if I was an owner. But how they get the money to invest there is very important to me because capital allocation matters. Okay. All right. So Outlook. Outlook is up for revenue of 2%. Gross margins are projected to be down 6.1%. EPS is expected to be down 32%. All right. So this is the quarter outlook. So that was the full year outlook. The quarter outlook, revenue is expected to continue to go down. Gross margin continue to go down, and EPS is supposed to almost be cut in half, essentially. All right. So there's perhaps a lot of reasons as to why, and we would have to look at the GAAP earnings to kind of visualize that. But so in summary, Intel, they're trying to say all these things, and now we're going to bring back the pins. Okay, so pin number one. All right, risks associated with Taiwan Semi, right, or the benefit of Taiwan Semi. So we all know that, Ukraine is currently going under an adversarial event. Okay, Russia is invading Ukraine. And this brings up the question, well, what are the risks of Taiwan, right? Conflict in Taiwan. This brings a lot of question marks for something like Taiwan Semiconductor. There's a whole host of concerns, right? Not only that, but think of it, even the sentiment, right? We talked in the past, for example, with oil production. It doesn't have to be exact policy that affects a business. It can be sentiment. Sentiment can actually affect the performance of a business because you got to think about a business as not just, what you see on paper. It's also exactly what you see in terms of the culture, the people, right? The workforce, how they feel, the talent. Where does the talent want to go? Does the talent want to stay there or do they want to go elsewhere? Then you have, for example, Samsung. Samsung is a regional player. They're right there in Korea. They'd like to poach the top talent. So would Intel, so would Global Foundries. So all these things could change the future for Intel. And so in this instance, uncertainty in that region might actually be good for Intel. Okay. Now, whether or not Intel will execute and whether or not Taiwan Semi, are we going to bet against their management or even Samsung's management in terms of navigating these uncertain waters is a separate question altogether. Now, with regards to Intel and their investments in the United States for fabrication facilities, we all, I think, agree that is the right move, okay? And we agree that perhaps they could benefit, I don't know if anyone disagrees, by the way, comment down below if you disagree, that they could benefit from some turmoil in that region. These are unexpected or things that could occur that change the value of this investment, right? Because then they would have no end in sight for demand for their business if Taiwan Semiconductor, for whatever reason, were to face some struggles in terms of fulfilling orders. And then that would be the perfect storm for Intel to actually make a massive recovery. Okay, that could happen. Now, onto the other point. Okay, the other point being AMD or the culture, because we're actually going to bring back the that point, right? Because we want to cover the resilient supply chain and all that and the risks there. And also we wanted to cover the culture per se, the pin in the culture. So AMD, Intel, from what I've gathered, Intel is not as desirable to work for at the present moment. All right. And that matters because talent will go, and you want passionate talent to go there. And we know, as I've stated, that a lot of the innovations have been kind of stemming from Israel. The Mobileye division and that Israeli division are very close, so to speak. All right, they're very close. They actually share a lot of things. We're going to show you guys, or I'm going to show you guys, kind of a little point of interest, and it's just a point of interest. We go on LinkedIn, we find this man, and I'll share that with you here. Martin Dixon. So Martin Dixon seems like looks like an intelligent guy. Well, let me tell you, he is an intelligent guy. We actually go down to his experience, right? And you see on his LinkedIn, oh, look at that. Intel fellow and vice president. Intel fellow and vice president, and he left. Where did he go? He went to Google. He's a director of engineering at Google. So there's a point of, and by the way, you can see the years of experience at Intel. This is a very important point, more than what most people think of, okay? And so for those of you who aren't in this sector, and those of you who are, please comment down below and you can share your thoughts here. But that's a big deal when a senior fellow, right, an amalgamation of knowledge at a firm leaves to another company. That's a big loss for a firm, okay? And it actually sometimes can be indicative of something, especially in this industry, in semiconductor design and production. All right, so this kind of culminates with the discussions I've had with the subscriber and subsequent discussions I've had with Intel, some Intel employees. And I'll say like the numbers, it's like 2 Intel employees, but regardless, take it for what it is because I'm saying that, these are anonymous sources. I get it. I understand. So take it with a grain of salt if you feel so inclined to do so. But this does affect my opinion as to whether or not I would invest in Intel. So now we have this basically loss of talent, a big deal, by the way. Don't underestimate the importance of losing a fellow. A fellow is basically the highest level of accreditation that an engineer can achieve at a firm, and the loss of a fellow is considered to be a big blow to that firm, okay? So now this person's working at Google. Well, we're getting that other pin out, okay? And now we're gonna talk about the outlay or the overlook of the industry as a whole. So I don't think it should be a secret to anyone that these large companies, Google, Amazon, Microsoft, so to speak, Apple, they're producing their own in-house designs, okay? And what does this mean for something like Intel? Well, it does mean that while they might still dominate in, let's say, the CPU industry, very specific use cases are going to be different, okay? And then this is something that many of you might not know because many of you, are like me, right? We're not working in this industry, but there are a couple of chip designs, or not chip designs, chip types. Let's call them categories. We have the CPU. The CPU is what you think of. You buy the Intel i9, you buy the Intel i7, you buy the AMD variants as well. Then you have the graphics cards, right? Then you have programmable chips. And then you have something that's called ASIC chips, okay? So ASIC chips, I want you to think of as hyper-specific chips, all right? Chips designed to do one thing, and they're designed from the actual design of the mechanics of the chip, and then they're programmed. There's the programmer who works in tandem, and they're programmed to do that one thing. And they're really good at that one thing. They're very efficient at that one thing, and they're not worth building unless that one thing you need to do a lot of, because the endeavor to go actually and build that ASIC chip has to be worthwhile. Okay, so for example, Teslas. All right, so Tesla, a lot of people think Teslas use in-house graphics cards or in-house chips. What is kind of lost in that is an understanding of what specifically type of chip is being used. Previously, NVIDIA supplied graphics cards to Tesla, right? There was the NVIDIA Tesla card, and that was used for the self-driving feature. In newer Teslas, you have Tesla's own ASIC chips. Tesla found it necessary that it's something that they're going to need, and they invested in the buildup of ASIC chips. So each Tesla has 2 ASIC chips. For one, it's a safety feature in case one of them fails, and then the other one just kicks in, or they actually kind of communicate and help each other out. So that's important to note that Tesla, for example, phased out the other guys. Now they make their own ASIC chips. Amazon, AWS, is building their own chips, right? And they're building their own chips off of the ARM platform, which x86 is the current architecture. We need the new architecture. Looks like it might be ARM. At least AWS is investing in that. Google is investing in that. Microsoft Azure, that's a little bit of a problem with them. They're not really doing anything in that category as far as I know. But I know that the other two big players are. Meta is investing in their own chips. So these companies are all plowing tons of money, which brings a bit of a concern to these legacy players. It includes NVIDIA and AMD, just so everyone understands. Now, I think that the ones who will have the hardest time are the ones with the weaker engineering culture, the weaker engineering capabilities. Now, in Intel, right, let's be very clear, you only need one good team to really fix things up. It's just that so far, Intel seems to be, I'm not blaming the engineers, by the way. I'm actually blaming the overall management for doing this. And I think that's not a specific or unique opinion. I think that there's a lot of that to go around, okay? And then, by the way, this all culminates into my concerns about management's allocation of capital, okay? That's a big concern for me, okay? And then when I was learning all this, it kind of said, okay, I was touching the tip of the iceberg, and I kind of just saw more and more and more of it. More examples that were probably leading to me concluding that I was correct in assuming that management, previous management, and even right now this management is not, in my opinion, allocating capital effectively. And allocation of capital is many things, by the way. Capital, there's also human capital, allocation of human capital. They're not allocating capital effectively. Land, labor, and capital as in money. They're not allocating that in an effective manner that is conducive of something that is going to be very competitive in the future. So all of this kind of culminates into this fair opinion that I'm going to share with you before we actually get into the valuation of Intel. Okay, so I know this video is already long. We're on the 30-minute mark. We haven't even gotten to the valuation. So I want you to remember that word, ASIC chips. I implore you, everyone, to actually look into ASIC chips. Understand what it is, okay? I know many of you are not working in that industry. Many of you maybe are. And then, again, I implore everyone who is working in that industry, you can share your thoughts down below. If you're not working in that industry, you can maybe ask some questions, and hopefully there will be other people who do work in the industry who can answer those questions. There are people in the Discord community that can answer those questions as well, which, by the way, the link should be down below. It's free to join. You have to answer 3 questions to kind of get through that. But regardless, I think that it's important for us to understand the distinctions. And also when it comes to mining, crypto mining. So crypto mining, a lot of people still think that graphics cards are the way to go. That's actually the older way of doing things. Right now, these what we call ASIC chips, okay, they are basically dominating at this present moment in time. And you just have to know about ASIC chips, and I'm trying to simplify it as best I can. Hyper-specific designed chips. They do one thing, and they do one thing amazingly. All right, so Intel, all right, or NVIDIA or AMD. This actually goes for all 3 of them. They can surpass this if they, for example, somehow figured out how to design these, basically they can design these AI chips, right? These ASIC chips for each and every customer. If they somehow can figure that out, this is all going to be well and good. There's not going to be a misplacement necessarily of graphics cards and CPUs. We're still going to need those for specific things. It's not practical to have an ASIC chip for everything, just so everyone, I know some of you were probably thinking that. They're like, okay, well, ASIC chips, we're just going to use it. No, that's not actually not what it means. So that's going to be for a specific purpose, that in which case these companies think it's actually better to use those chips. But, for example, my computer will, for now and for the foreseeable future, will use something along the lines of a CPU and a graphics card, okay? Because it's good for what I need and the like. So, all right, we're just going to hop over to the model here. And, let's actually see. So we have to type that in. There we go. And just so everyone understands, I use Google Sheets. This is the front facing of the actual model. And we'll kind of discuss a little bit about some other stuff that I actually want to cover. So we're actually going to go to a 12% discount rate. I actually want to state right now that you guys probably seen Everything Money. Everything Money has made their own evaluation. Go check out their video if you want, and then kind of compare this to this. But they've done in the past. I've done analysis on Intel in the past, and essentially what I want to say right there is I've seen their model, what they've created. Basically, I just want to make a quick comment on it. It's I understand how they built it. It's one that you actually learn how to design in one of your very first finance classes in university, or when you should be, because it uses a bunch of assumptions in it. But I'll say that there's so many different ways to design a model, and there's going to be infinite variations. I think that the one they're using is it has its problems. It definitely has its problems, and that's pretty much where I'll leave it. It's one that I think I could design in about 15 minutes of just sitting around. And I actually have for a close friend of mine, their little brother. I just made it for them because it's like a good smell test at the very least. But this is one that I actually use for work. So I actually use this one at work quite often, and it's a good way to shift through companies. Of course, it's a tool at the end of the day. It doesn't actually make the investor. It's a tool. All these things they're just tools. They don't actually define you. They just help you. And I basically, when I programmed a lot of the calculations, it thinks like me in a lot of ways. Okay, but we'll get to this. So, and it's going to replace me one day. No, I'm just designing my own replacement. Anyways, we're getting to the crux of it. So 12%, and we're sort of implying a small margin of safety. I don't agree that they should be doing buybacks, but I don't think management will be able to help themselves. I think that they should be investing only into the business. And again, my opinion, so I'm very clear about this regarding all this. I think that that they invest invest the capital and not return capital to shareholders, just invest it into the business. And so we're going to talk about this when we look at ROIC. So if you look at ROIC down here, and then we'll get to the valuation at the end. ROIC is a good metric in this instance. It's low right now. We'll actually take a look at the ratios. It's low right now because they're doing a lot of investment. ROE and ROA, I think ROE is dangerous sometimes to use, and I'll actually take a moment here to discuss that. ROE, you got to understand that management obviously has a finance and accounting background. Obviously, you know exactly how to manipulate that number. And basically, one quick way of manipulating it is somehow decreasing stockholders' equity. I'll let you guys use your imagination as to how someone might be able to do that. So if you decrease stockholders' equity and kind of keep income where it is there, ROE starts to go up. And a lot of management teams have their bonuses tied to the metric of ROE. So very interesting to note that is a very easy one to manipulate. ROA, is going to be good for this business because you actually want to see what return they're getting on their assets. Now, if you take a look at analysts say that it is a buy with a price target of 21.79. I'll actually take a look here. The revenue is expected to decline. We see the estimate revenue is expected to decline, but cash flow is expected to grow. This could be the sale of Mobileye. I have no idea why analysts would be assuming that, but it could be because of that, or it could be they believe that the investment into the fabrication facilities will actually decline at that point, in which case cash flows will indeed go up. And shares outstanding, you can see that they have been buying back shares, but remember, and I'll bring us back here, has that been well executed? I would argue that probably not. Okay, and that's the problem with buybacks. If they're not well executed, it can be a destruction to shareholder value. Okay, so taking a look at the ratios, remember that finance and accounting is the design of the financial statements. I like to say that finance is deriving a story from the numbers. Okay, that's often a statement I will say here on Capital Mindset. So taking a look at the liquidity ratios, they are better, or they're about the same actually. Solvency ratios, they have gotten worse across the board pretty much. Yeah, they've gotten worse across the board. They've taken a bit more leverage as the time has gone. DuPont analysis, we see the gross profit margin has gotten worse. Operating margins has gotten worse. Well, about the same actually if you take a look at a longer time period, but it's gotten worse since more recent years. Net profit margin has also gotten, it's gotten worse from more recent time periods, but it's more or less range bound. ROA, ROE. Again, ROE looks like it's always looked amazing. So if you had been investing based on that metric, you probably would be not happy with yourself right now. ROA has looked meh, some years good, some years bad. ROIC, same thing, meh, some years good, some years bad. Earnings quality has been good across the board. Remember, there's a correlation, not a causation between that metric. So I think that, taking a look at Intel and kind of understanding what it is that we're looking at, we're going to then now go to the evaluation portion. But yes, I think, for example, the growth rate, and I'll actually bring back a pin actually from this because the growth rate I think will be greater than what some people might perceive to be the possibility, because you have to assume a recovery point when they start to invest less in terms of cash flows into the business, into the fabrication facilities. But we still have similar amounts of, cash flows from operations. All right. So taking a look at the discount, I'm applying, just like the everything money discount here of 12%. And we would see that if you think it's only going to grow at 10%, we're basically there. Yeah, we're basically there. We're in the low 40s. So if you think they're going to grow faster and you do imply some sort of recovery period and that they figure out all their problems, I would say that Intel has approached a interesting point. interesting point. But you're not actually getting that much of a margin of safety, I believe. So, for example, if you think that a 15%, which I think is more appropriate, I think that there's more room to actually kind of decline before you get into a very interesting investment opportunity. But remember all the things that I stated early in this video, because you can't just look at this and then just, think that you've done all the homework, right? No, there's far more to that. There's a lot of risks, a lot of unforeseen risks, because malinvestment is an unforeseen consequence. Okay, so the consequences of malinvestment will not be shown here right now. They are shown in your assumptions. Your assumptions should be showing a scenario of malinvestment. So I will showcase that now. If I think, for example, that the malinvestment will have a part to play in the future, I think, for example, they could achieve somewhere around 5%, in which case I would expect a 50% drawdown from here if that occurs. And I've kind of modeled it out that I think it's about 5%. So if supply chains fix themselves and everyone else is able to supply enough semis, right? Now Intel's going to be in a big problem. And everything is about the cost of performance. Cost of performance is really, at the end of the day, what matters. And if Intel gets leapfrogged, in a sense, in the newer generations, that's going to be a problem. And if the management team is unable to kind of cultivate a fantastic engineering culture, and we pile that in with the bigger companies are building out their own chips in-house and they don't even want to use Intel's anymore because they can design their own specific chips, that cuts off a big portion of Intel's business, a big concern longer term, okay? So all of this kind of culminates into that pessimistic scenario that you're seeing there, and the recommended portfolio rating by the model, right? By the software, you could say, because I guess you could call it a software, because this is the front-facing end, and then I use Google Sheets as kind of like my front-facing end because it makes the UI. I don't have to worry about designing UI. Of course, that's what's in the works right now. We're basically designing a nice UI and then going to put it out in around August 2022, because I keep getting questions about the model, and that's pretty much the timeline. But the front-facing end is essentially, this version. And basically what I'm getting at is the model's saying, it's not worth the risk, and it's taking into account the risks of bankruptcy, which, by the way, the model's actually picking up no risk of bankruptcy, even in its own design metric in-house and the Altman Z-score. So both of those are actually saying, it's not really at risk of bankruptcy. So even with those concerns in mind, the model's just not liking it. It's just not liking it at this present point in time. All right. I think that pretty much covers everything on Intel. I'd implore everyone to kind of consider the whole picture that I've discussed here today, not just this end point. Try to put everything all together. And at the end of the day, a lot of these are my opinions of my understanding based on talking to subject matter experts. There's obviously more to be said by that, but this video is already so incredibly long that I don't want to make it any longer for you guys, because I want maybe to spread it out a little bit into other videos. Okay, so as I talk about other semiconductor companies. All right, so on that note, guys, thank you guys so much for watching, and I'll see you guys on the next one.